Good afternoon, and welcome everyone. It's great to see so many of you joining us today for our webinar, and Inspector Calls, Are You Ready for Compliance Check? So if you're expecting something else, then you are in the wrong place. My name's Esther Carter. I'm a partner at Moore Kingston Smith. As I always say, there's always lots of familiar names on the delegate list. But for those of you that don't know us quite so well, Moore Kingston Smith is a leading audit, tax and advisory firm. We work with businesses across lots of different sectors, as well as not-for-profit and private client. And we're also part of More Global, which is an international network with presence in over 100 different countries. So very well placed to help our clients with their increasing international endeavours. So an HMRC compliance check can be pretty disruptive. It can be time consuming, and if issues are uncovered, it can be unexpectedly costly as well. So today's session is really designed to sort of demystify that process. So we'll explore why HMRC carries out compliance checks, what typically triggers them, what inspectors look for in practice, and where businesses often encounter sort of various pressure points along the way. So we're going to be looking at VAT as well as PAYE compliance checks, and really sort of seek to sort of share some practical tips on how you can approach them confidently. So we've got a panel of experts assembled to discuss those changes and what they mean for your business going forward. So we've got John Hood. John is a tax partner and is Moore Kingston Smith's tax dispute resolution specialist. He's an expert at dealing with complex and serious tax investigations launched by HMRC. And with more than 2 decades of experience in tax dispute resolution, John has vast knowledge of HMRC administration and enforcement procedures. And he's also previously worked at HMRC as well. So he's got a bit of an inside track, and that gives him a really deep understanding of the key strategies that are needed to get the best outcome for his clients. Emma Beachy. Emma is one of our VAT directors. She has over 15 years experience as a tax practitioner, and she helps clients navigate the complex world of VAT, including planning and structuring issues. And last but not least, John Williams. Yes, 2 Johns on this call is going to make it confusing. John Williams, who is an employment tax partner providing compliance and advisory services, and he focuses on the employment tax implications that are arising from the sort of the rapidly changing and evolving working landscape. And this includes advising employers on the application of the off-payroll working rules, and also the use of contractors as well as international working arrangements as well. He's an active voice in the conversation around developments in tax legislation, and he's a member of the Confederation of British Industry Employment Taxes Working Group. There's a mouthful, and another mouthful as well. He's also a member of the HM Revenue and Custom Expatriate Taxes Forum. So that really kind of gives him first-hand insight as to the impact that all this is having on various business sectors. So before we begin, a few housekeeping points. These webinars are for you, so please do ask questions. Please pop them in the Q&A function, much easier to keep track of them there rather than in the chat function, and I will endeavour to weave those questions into the questions that I have for our panelists as we go. If we don't get around to answering your question, and if you haven't submitted it anonymously, then we can follow up with you individually afterwards. Today's session is being recorded, so please do share that with peers and others who are unable to make it today, and it will be available on our website and also on our YouTube channel. And finally, we'd be super appreciative if you could just complete the very, very short feedback survey that we will pop up at the end of this webinar. It really does help us to shape future webinars. So let's get started. So, to begin with, I think it's helpful to understand the sort of the legal framework that HMRC operates within. There's quite a lot of anxiety, I think, that comes with compliance checks and from the uncertainty about what HMRC kind of can and can't do. So maybe coming to you, John, first, what powers do HMRC have when they're making visits to businesses, and what restrictions exist?
Thanks, Esther. So HMRC does have a statutory power which allows it to write to businesses and say, we want to come along, or we want to review your books and records to check your VAT position or PAYE and employment taxes, and also just to generally visit the business premises if they think that's necessary. Now, while there is that statutory power, HMRC has to operate within certain conditions. So whilst they can come and look at the business premises, the business assets, the books and records, they have to do that at a time that's normally convenient to you. So even if HMRC write to you saying that they want to visit a particular time, it's useful to enter into a dialogue with them to try and arrange a suitable time. One of the things they can't do is visit a home, a dwelling. So if they did say they wanted to visit a home address, then they shouldn't really do that. So that's an important thing to remember. It's always important to understand that they should minimize the disruption to a business. So doing it at a particularly busy time during if your business is seasonal, particularly busy time of the year, then that you should try and work with them to get around that. And also they should work with business advisors, accountants, tax advisors, etc. So if you wanted to have someone there with you to deal with matters, then that's perfectly reasonable. And they can also, if necessary, you can arrange for the compliance check to take place at the accountant's address. So really, I think the fundamental message is, whilst HMRC has a statutory right, they should normally work with you to make sure that they keep the disruption to an absolute minimum for you.
Somebody's asked if you work from home, is that still considered a dwelling? Good question.
Well, if you're working from home, then that would be a dwelling, so they can't ask to attend that particular address. But I think you'd have to try and work around that. I mean, obviously, if you agree to it, it could happen, but they don't. You don't have
Mm.
to agree to it.
Mm. And another thing I think some people sometimes get nervous about is, are inspectors suddenly going to just turn up at the door? Can they do that unannounced?
Well, that's a very good question, Esther. I think that fundamentally HMRC can, but they normally only do that with VAT. They have to normally give 7 days notice if they're going to turn up. There are some situations where they can turn up unannounced, but they are very rare. And so I'm not normally worried about that. I think the important thing to remember, if HMRC were to turn up, then obviously you're within your rights to ask for them. What powers they're relying on to do that. But again, just to reassure you, that doesn't happen very often, and hopefully that most of us will never see that.
Mhm. The other things people think about a lot is, why has my business been selected? What might prompt it to be selected? I mean, do they just randomly select businesses, or is it a little bit more thought process goes into it than that?
So most visits aren't random. They would have normally identified some type of risk that there may not have been tax may not have been paid, or there was something that comes to their attention. But the thing to remember is it's a risk. They haven't actually necessarily identified there's anything wrong. They might just want to check to make sure that everything's okay. But fundamentally, there are no or very few random checks. There's normally a reason for it. HMRC now is very much a project-driven organisation, so they might be running a particular project on a particular type of industry, so that can lead to a check. Um, and there are some sectors which are considered to be higher risk than others. So in businesses involving cash or where the construction industry sometimes can be considered to be high risk. But those are normal reasons for a visit. If you've not got a very good compliance history, that can lead to HMRC to visit you. But again, I think it's reasonable to say that they've probably got a reason to come and undertake the compliance check, but it doesn't mean that they've necessarily identified there is something definitely wrong. It's just that they've identified a risk.
Thanks, John. I think this is some useful sort of context and a bit of reassurance as well. And maybe that's a theme we'll come back to as we talk in a bit more depth about VAT and PAYE. So maybe let's now turn to sort of what actually happens once a compliance check is underway. And Emma, perhaps we'll start with you on the VAT side of things. So what actually happens at the visit or the
Yeah,
check?
so well, I suppose just to set the scene a little bit with VAT checks. So when it comes to VAT checks, they're not HMRC aren't actually there to provide an audit or assurance function. So I think there's a common misconception that if they give you a clean bill of health in a VAT check, that there's no issues. That's not really what they're there for, and they're also not under an obligation to tell you how to improve your VAT position either, unfortunately. So their main objective is going to be to ensure that the right amount of VAT is being paid by the right person, business. So checks can be online, so via email or via online forms, or they can be in person, but they usually have similar approaches. So under normal circumstances for VAT, HMRC can look to go back up to 4 years. That's the standard. They can only go back further than that in very limited circumstances. So you're normally looking at circumstances where there's some kind of evidence of intentional wrongdoing. So as I've said, that's obviously a rarity in comparison. So in practice, in the visit itself, there's a risk-based approach. Whilst they can go back 4 years, they're probably not going to want to look at every single record over those 4 years. So they'll likely ask a number of questions about the business and your activities and your controls that you have in place regarding your VAT records. But also they might want to look at things like that make up your VAT return. So bookkeeping records, sales invoices, bank statements, debtors and creditors, basically some spot checking over a sample of different periods to kind of get a feel for the business. So what they are essentially for looking at is what is the VAT risk here? Um, so, for example, if you operate a particular VAT scheme, they'll probably want to ask you some questions about that. If you're importing goods, that's an area that they might focus on. The same goes if you've got significant expenditure on a capital project, so you're refurbishing your office or something like that. Obviously, that might come with a lot of costs. So it really is what are the key risk areas. Um, it's par for the course that you should cooperate fully with HMRC, but it doesn't necessarily mean offering up information that's not relevant to the checks that they're
Mhm.
undertaking, giving them carte blanche access to everything if they don't need access to that specific information. So when they do ask questions, make sure you answer the questions that you're being asked, but in a factual and closed way. And we definitely shouldn't be guessing the answers. If in doubt, go away and check.
Yeah, don't give them any more fuel than than you need to. Had a question come in, which is, would not having had an inspection for a long period of time increase the likelihood of HMRC undertaking one? And I think that is generally what most of my clients think. Oh, I haven't had an inspection for 3 years, or must be due one.
I mean, it certainly can do. I think, looking back to the pre-COVID periods, checks were more regular, I would say, especially with VAT. You tend to, with this 4 year window, you tend to get in an ideal world, HMRC used to like to look at things every few years. In reality now, it's probably not as often as that. So, like John said, it would normally be triggered by something specific. But if you haven't had one for a very long time, or for example, with VAT, if you're in a high risk area or you're a repayment trader, those tend to be the ones that get more frequent checks.
Okay, that's useful. Thank you. So I guess, when somebody gets that letter or that email from HMRC, that can be quite sort of stressful, cause a bit of concern. So what's the first thing somebody should do if they do get an indication that there's going to be a VAT check?
Yeah, so I think with VAT, obviously there's a number of reasons it could be triggered. So it's not necessarily that you've done something wrong or that HMRC think you've done something wrong. So I'd say the starting point is definitely don't panic.
Mm.
They're quite regular, and normally they are fairly run-of-the-mill questions, etc. So I think the starting point is make a note of any deadlines that HMRC have set. Um, VAT inspections have increasingly evolved, so they're normally conducted online now. However, you do still get the occasional officer that wants to come out for a visit in person. Doesn't necessarily mean there's anything out of the ordinary. I think it means they might just want to have a day out of the office. Um, so often the first contact is going to be a letter or some kind of email from HMRC, and it can contain quite a fairly daunting list of information being requested. But because these letters are quite standard, obviously not necessarily all of the information on that list is going to be relevant to your particular business. So I think that's something to remember. And the key is to try and take control of the situation as far as you can. If HMRC want an in-person visit, as John's mentioned, schedule a time that suits you. And they're normally quite amenable to having some flexibility with the time that you choose, around deadlines. And you can have your agent there as well. You can also ask HMRC to deal directly with your agent if you would prefer. So obviously MKS can support with that. And I think one of the main things that I want to flag is that mistakes happen. So if you get a letter from HMRC, then you have a look at your VAT records and you're like, oh no, I have identified an error. Don't try and ignore it or hide it or wait for HMRC to find it. Make sure you bring it to HMRC's attention at the earliest opportunity, because it can help further down the line if it comes to talking about potential penalties and mitigation there. So I think the key is, don't bury your head in the sand about it.
I think people tend to assume that the person coming out to visit them will be a bit of an expert in their particular area or sector, but is that the case?
In most cases, I would say probably not,
Mm.
especially when it's a routine check. So a lot of the online checks are going to be a specific team that probably just deals with repayments, etc.
Mm.
And at least initially, they're going to be carried out by generalists or jobbing VAT inspectors. So, and also we quite often see for VAT visits in person that there might be a trainee tagging along. So I think don't be concerned if there's more than one of them that come to your office. They tend to take the trainees out to the visits. For more complex inquiries, it could be that they involve a specialist team, but as I said, that's not going to be the majority of cases.
Mm.
There tends to be a greater reliance on, I think, pre-prepared questionnaires. So HMRC have a specific list of questions that they will run by and kind of a bit of a tick box exercise there. So I think the key is to be prepared, really. So know your business. If you've
Mm.
previously had communications with HMRC where there have been discussions about what you do, or they've ruled on the VAT treatment of a supply, or you've agreed a particular method for your VAT with HMRC before, just have those things to hand, because
Mm.
the inspector that comes out this time isn't necessarily going to be aware that those previous discussions have happened. And as I've said, if you don't know the answer to a question, don't guess. Go they will absolutely give you the opportunity to go away and double check that. And I think the final point is that HMRC don't always get it right, unfortunately. So if during as part of a visit they do make any decisions or rulings or advice on the VAT treatment, make sure that they put it in writing. Then you can go away and check with your advisor and make sure that any of their assessments, etc., are correct. Because, sometimes it could be that they've just misunderstood your business slightly.
Mm. Somebody's asked, how is data collected under making tax digital being used for VAT visits?
So under MTD, obviously, in terms of your submission to HMRC with your VAT returns, it is still only the 9 boxes on your VAT return that get
Mm.
filed with HMRC under MTD. So they still don't have access to those backing records as part of the actual return filed. As part of a compliance check visit, obviously they might ask to review the records that make up the VAT return that you've submitted. So that's going to be your digital records that you've kept. Now, obviously, we wouldn't necessarily suggest you give them access to your software that they use, but it would be pulling reports from that software that make up the VAT returns. But at present, they don't get the backings as part of the VAT filings with
Mm.
HMRC.
Another question has come in. Can persistent queries on a high value VAT return trigger a visit?
So is that so as a starting point, a high value item on a VAT return, if it's an unusual item, that in itself can trigger a
Mm.
visit. We quite often see that if a normal payment trader might have had large expenditure and obviously it's a difference, so that would kind of raise a flag with HMRC. Um, Asking specific questions to HMRC, I wouldn't say would normally in itself trigger something, unless it's part of an ongoing inquiry. But yes, a one-off big transaction that's unusual, that could trigger something.
Mm. So it might be useful to give us some sort of what the typical sort of common errors that are found during an inquiry.
Yeah, so I think really in terms of common errors, most of them are going to revolve around record keeping, not keeping sufficient records to back up the figures on your VAT return, and also just general human error. You know, we are humans, we do make mistakes. So under MTD, you've obviously got digital records. So I think, there is a bit of a misconception that all of my records are on a computer, so they must be correct because it's been fed through software. But obviously, the information in that software is only as good as the information you're putting in. Um, Things like not having copies of VAT invoices or having pro forma invoices rather than the full VAT invoice, that can be something that HMRC might pick up on. Recovering VAT at the wrong time or on costs that aren't related to taxable supplies. So there's obviously a requirement that any VAT you're recovering on costs is in relation to the making of a taxable supply. Um, VAT on business entertainment's a big one that HMRC look for. So, if they're seeing lots of restaurant bills, etc., there might be questions on who was at that event. Is it staff? Is it entertainment of clients, etc., or personal expenses? So, if expenses that are unusual for a business are cropping up, then that might be something HMRC might want to focus on. I think also if you are a business or a charity, etc., and you've got partial exemption or business non-business restrictions, then again, that's an area that can be quite a focus.
Mm. A couple more questions come in, but I'll leave them for now,
Hmm.
and hopefully we'll have
Yep.
time and we'll come back to them later because I want to just move on a little bit. So because another area that sort of increasingly features in compliance checks is supply chain due diligence, particularly given HMRC's focus on fraud and labour supply arrangements. So John, maybe coming back to you, what does HMRC expect businesses to do in terms of supply chain due diligence? Oh, you're on mute, John.
Sorry. HMRC expects businesses to undertake due diligence on their suppliers. Just because there's some bad actors around criminal activity, around fraud, where there's large amounts of money involved, and if the VAT element is not paid, that has a significant impact on the exchequer. So knowing who your suppliers are, making sure that you check that they're compliant, so that they're registered for VAT. I know it sounds obvious, but they're registered for VAT. They're paying their taxes. I know this can sound rather onerous on a business, but nonetheless, it's important to the business relationships are on what you'd normally expect to be commercial terms, and that it doesn't appear that there's no kind of profit element for the supplier. What we've seen is, as you mentioned, off payroll workers is a big area where HMRC has identified fraud over the last 5 years. So it's a big area. It's continuing to increase, and we know that from a VAT perspective anyway, HMRC are making sure that they undertake more and more visits. It's a high profile area for them because it's considered to be high risk.
Thanks, John. So now I'm going to sort of shift focus a little bit onto sort of PAYE and employment taxes. Obviously, while payroll is an obvious starting point, HMRC's approach obviously is much broader. So other John, coming to you. So
Yeah.
during a sort of PAYE compliance check, what do HMRC focus on there?
Yeah, so they will, of course, ask to review the payroll records and carry out the basic checks of what's actually gone through the payroll. But as you're saying, it's a lot more broad than that. So this is quite non-exhaustive, but they will want to look at things like expense and benefits. So a business that provides their staff with private medical insurance, company cars, staff entertainment, for example, those sorts of benefits in kind, they will want to look into that and make sure that there is correct reporting that's typically outside of the payroll at the moment. And from my experience of employer compliance check, there's often sort of a high percentage of those checks often uncover some area, a lot of errors in that particular area.
Hmm.
Another area of focus, which John Hood touched on, was off payroll workers. So a business might engage contractors to perform services, so they're paid off payroll. But that business has a responsibility to determine the status of that worker from an employment tax perspective, typically. And it's very easy to get those rules wrong because they're quite subjective. So that's definitely a focus area at present from HMRC during these checks. Other areas include your classics, really. So travel and subsistence, making sure that businesses aren't reimbursing for private, personal journeys. We're seeing businesses get caught out in this area, particularly with the rise of remote working and some businesses reimbursing their employees for the times that they do come into the office and not realizing that in most cases those journeys are taxable. Um, we're still seeing a lot of businesses misinterpret rules around termination payments and assume that they can pay those largely tax and NI free, which isn't always the case. And finally, this is touched on in employer compliance checks, is national minimum wage and making sure that businesses are being compliant in that area and paying their staff above those national minimum wage, national living wage rates. They will only ask basic questions. There won't be a full check during the compliance check, but rather there are separate teams at HMRC that would launch separate compliance checks specifically on national minimum wage.
Right, thanks, John. And many businesses as well, now have quite internationally mobile or remote working employees, which inevitably adds a layer of complexity. Do HMRC tend to sort of hone in and ask questions about this particular group of employees?
Yeah, so many years ago they didn't, and but I'd say over the last sort of 5, 10 years, HMRC officers have become more knowledgeable of international mobile employee rules. They're more confident in asking questions and then asking follow-up questions to the information that's then provided. And
Mm.
they typically focus down on areas such as short-term business visitors. So a business might be part of an international group where an overseas company has staff that visit the UK office for a few days or a few weeks per year. And there's a common misconception that there's no reporting required in respect of those types of employees. Um, Traditional secondments, so that overseas group company might send staff or employees to the UK company for 2 years, and there's varying allowances that will be paid to those types of assignees or secondees. There's various tax reliefs that will apply as well, and they are quite complex. It's very easy for employers to get that area wrong, and so HMRC are quite well versed in sort of following up on and drilling down into the detail there during a check. And then even smaller businesses that aren't part of an international group, they might have staff that turn around to them and say, I wouldn't mind working remotely for the business, but from an overseas location where there's more sunshine than the UK.
Mhm.
And with that, it brings about complexities to UK income tax, NIC. Sometimes businesses might think they've gone non-resident and they don't need to apply tax or social security. So it's very easy to get it wrong, and that's why HMRC will focus down on that area.
Mm. Question coming around casual workers. Somebody said, is it compulsory to include the addition of holiday pay? We are paying national minimum wage plus a percentage for holiday.
Oh, that's a very technical question. I'll pass on that for my national minimum wage specialists in the team. But
And we can
but whoever that
follow that
was,
up
we
afterwards.
can follow up on that separately.
Thanks, John. So if HMRC does identify errors during a sort of PAYE compliance check, the next question, I guess, is, how often or how the kind of really resulting liabilities are actually dealt with in practice,
Mhm.
which has a bit about how the liabilities would actually be settled and by who.
Yeah, so where a payroll error, so PAYE, should have gone through the payroll, employer misunderstood the rules, they didn't do it. So, for example, miscategorized an employee as a self-employed worker, for example. That resulting PAYE and NIC will be paid by the employer under this compliance check and settled with HMRC. There are some complexities to that, and you might be able to offset against any sort of income tax paid by the the worker who filed as a self-employed individual. But ultimately, any payroll errors, yeah, the company under check has to pay over the tax and NIC under this process. There are some nuances to this in that if the errors that arose during the check or that got identified were in relation to benefits in kind, so I've mentioned before about private medical insurance, company cars, staff entertainment, technically the income tax liability resulting from those types of benefits is actually that of the employee. But most businesses will agree to voluntarily settle that income tax on behalf of the employees
Mm.
as part of this check. And the reason being because it was the employer that made the error. They should have reported it on a Form P11D, for example, or payrolled it as a payroll under the payrolling benefit rules. Um, and also for the fact that if the employer doesn't voluntarily settle that income tax, HMRC could seek that income tax back from each employee individually and pursue them for that. And most employers don't want that to happen. They want to maintain employer-employee relations. And another benefit is that if the company does settle the income tax on behalf of the employee, they typically won't charge penalties for the fact that they didn't file P11D forms or the P11D forms that were filed were incorrect.
Mm. We had lots of questions come in. I am going to leave them to the end because otherwise I worry we won't get through the rest of the questions
Yeah.
that we have. But anyone who's asked a question, don't worry, it will get followed up in some shape or form. So I think Emma sort of alluded to it earlier. HMRC
Yeah.
officers, they are human. Mistakes do happen. But what happens when they do, John?
Yeah, unfortunately, doing PAYE as well as VAT. We've had just as a recent case in our team, HMRC had misapplied the rules in relation to the tax treatment of a company providing staff uniform to its employees. I won't go into detail, but in short, it involves not using the correct valuation rules and making some basic mistakes in their computations. The resulting tax due, the amount that they were demanding from our client was over £100,000 in tax and NIC, and our client was pretty much ready just to pay it over because they assumed that HMRC was right. But then they thought, well, given the amounts involved, let's just check with our advisor. So we had a look, saw the errors, and the actual liability was in fact £5,000. So you can see that you could quite easily end up paying a lot more tax and NIC if HMRC have made a
Mm.
bit of a blunder. And you'll often see that with areas of employment tax where approaches are taken with HMRC, where the rules are quite subjective. So we mentioned off payroll workers. Um, it's always worth speaking with an advisor to see if there's an argument to be put back to HMRC to see if they can be convinced that
Mm.
actually that item is in fact non-taxable.
Mm.
Um, we definitely see that a lot with off-payroll working, but also more recently with visa renewal fees. It's a contentious area. HMRC's published view on that is that they're taxable. Pretty much every tax advisor professional disagrees with that based on the legislation. That's then led to HMRC having to meet with Chartered Institute of Tax to open discussions about where to go with that, and that may result in a mellowing of
Mm.
HMRC's strict approach and the rules change. And so it's always worth consulting the advisor to see where are things at with these more subjective areas, what arguments could be put forward, and certainly to make sure there's no basic computation blunders.
Thanks, John. So I think maybe sort of bring things back together from the PAYE and the VAT perspective. I mean, other John, maybe some practical advice. Businesses that are facing a compliance check. What would your sort of top tips be on how to handle a check?
Yeah, I think the fundamental top tip I have is, provide information that HMRC reasonably required reasonably require. So if they're checking the VAT, for example, if they ask for PAYE records, I think it's totally reasonable for you to say, well, why do you need that information? Now, it's important that you cooperate, but you also don't want to volunteer information, because obviously the more information you give HMRC, the longer the compliance check or inquiry can go on. So it's always important to make sure that HMRC are entitled to the information. It's always good advice to check with your accountant or tax advisors to make sure that HMRC are asking for the right things. If HMRC want to have a meeting, then always ask for an agenda for the meeting so you understand what they want to talk about, so you can have the right people there. Don't give HMRC access to everyone. Limit who they can talk to. That's always really important. Everyone normally wants to cooperate with HMRC, but sometimes people might say something not realizing that HMRC are going to make a note of it. So that's really important. I always think it's worthwhile speaking to your accountants or advisors at an early stage to make sure you get the right advice, because prevention rather than cure is the key here. Without sounding dramatic, it is a damage limitation exercise. If HMRC come and visit you, you want to make sure that you keep it as short as possible. So I think that's really important, to make sure that you take the best steps. If HMRC does say that there is a liability, it's always important that you ask them to put it in writing so that you can then, talk to your advisors to make sure if it's right. John just highlighted that, where HMRC had asked for a liability which is a lot higher than in actual fact was due. Also, just to remember that, it's always good practice that if you want to have HMRC, if you have a meeting with HMRC, that you ask them for the meeting notes so that you've got a record of what they've said. If they do put something in the meeting notes that you disagree with, then it's perfectly within your rights to flag that to them and either correct it or actually say what was said from your side, just to avoid any problems in the future.
Mm. That's really helpful. Thank you, John. So then maybe sort of finishing with a few of the sort of the most common practical questions that we get asked once the compliance check is underway. How long does one typically take to resolve, John?
Well, if it's a compliance check, that can be, say, 6 to 9 months. If it's an inquiry into a business, it can take longer, and the average is about 18 months.
That's a long time, isn't it? To be
Yeah, it
uncertain about
is.
what the outcome is going to be, and obviously to think about what you might need to put in your accounts, whether that's disclosing the issue or making a provision, for example. And if sort of during that process HMRC do identify a liability, I guess the next question is does that tend to be dealt with in practice? Can you negotiate time to pay if you're suddenly landed with this big figure?
Sure. Yeah. So I think it's important to remember, if HMRC and you accept that there is a liability and you need time to pay, they would normally talk to you about it. If there are problems, it's always important to speak with your advisors, because they might be able to find a way of resolving it for you. But yes, if there is a liability, it's always important to raise the flag about how you would pay it with HMRC at an early stage, so that you can get the best outcome for you and your business.
And what about the dreaded potential of penalties and interest, particularly interest now becoming a much more meaningful figure than it might otherwise have been a while back?
Yeah, I mean, interest effectively is considered to be financial restitution. So, it's to reimburse HMRC for the fact they haven't had that money. It's very difficult to avoid paying interest. With penalties, it's a different matter. HMRC can't charge a penalty if there's a genuine mistake. However, if there has been what they consider carelessness, which is failure to do what a normally careful person would do, then there can be a penalty. And then also, if there's what HMRC term deliberate behaviours, which is where you've done something deliberate. But you can minimise penalties. I mean, we've talked about it today, giving HMRC the information that they ask for, telling them or answering their questions as early, and if there is anything that you need to tell them about, then tell them at an early stage, because all of these things will contribute to minimising the penalty. And in some instances, HMRC will suspend penalties as well.
Thanks, John. And also, how are there ways in which clients can, I know the answer to this, but what are the ways in which clients can sort of limit the impact and the cost of a compliance check or inquiry?
Obviously most businesses don't expect to have a visit every year, but you can have what we call fee protection service, which is where you can it's a form of insurance whereby it covers the cost of an inquiry. Our firm offers it to our clients as a subscription service, and it normally covers the professional costs of up to about 125,000 per client. And it can be really useful because it avoids that uncertainty as to what the cost would be if you do have a compliance check. And a lot of the time it would cover the cost of just simply answering HMRC's questions and resolving issues. It doesn't necessarily mean that there has to be a liability. So it can be really useful for clients if they want to make sure that they've got that protection in the event that something does come up.
And the cost of it, the annual cost isn't particularly huge either, is it? It's good value, they would say.
Yes, it depends on the size of the business, but yeah, it's good value
Yeah.
because obviously it normally equates to, a very small percentage of what the normal cost of an inquiry can be,
Yeah.
or a compliance check, really depending on what the issues are. I mean, the bigger your business or the more complex your affairs, then obviously as we mentioned earlier, the more complex, then the higher risk of a visit.
We have a couple of minutes. I might just quickly pick on a couple of questions. Reverse charges. Do we see these as a growing issue? One for you, I guess, Emma.
Oh, sorry, my lights have just gone out in my meeting room. Yes, reverse charges is an area that HMRC would generally look at on a VAT check to make sure that those are being applied appropriately. So for those that aren't aware, that might be if you've received services from an overseas supplier. That could be where an occasion you might need to apply the reverse charge, but also reverse charge is normally within on a domestic basis is normally within the construction scheme, industry scheme. So I think it's certainly an area HMRC look at to make sure it's been applied appropriately.
Thanks, Emma. John, I think it was you that mentioned supply chain due diligence. Somebody's asked, when do we need to start checking the right to work of freelancers?
Yeah, well, it's in reality, it's important that you check your suppliers now to make sure that they're tax compliant. Supply chains normally would be, businesses, and if you have a really if they're providing a lot of services to you, making sure that they are tax compliant is really important. HMRC expect you to go to undertake basic checks. It's very difficult for us to say. I mean, John and I have come across this before for clients, and there is no definitive list as to what you need to do. But actually understanding who you're dealing with and making sure that they are, registered with HMRC is a really good start to make sure that you minimise the risks.
Thanks, John. Emma, probably coming back to you. Somebody's asking if HMRC take a long while to agree a VAT return where there's a repayment, will they then pay interest on the late repayment of that
Yes, they
VAT?
should do. Unfortunately, it's not as generous as the interest that you would pay them if the payment was late to them, but they should
Yeah.
pay interest on that. Yeah.
Well, on that positive note, we are at 2:45, which brings us to an end. So thank you very much to the 171 people who attended this webinar. I think that might be not quite a record, but near to one of our records, which just shows how concerned everyone is about this topic. So I'm hoping that everyone's found something useful to take away from today. Like I said, the questions we haven't answered, we will come back to you individually on those. Do take a moment to fill out the feedback survey if you can. It's super helpful. And obviously, if you've got any other follow-up questions or queries or concerns, our team, Emma, John and John, will be more than happy to answer any questions you have. So thanks to our panelists. Thanks for everyone for attending, and enjoy the rest of this sunny afternoon. Thank you very much.